Kjør intro. Du lytter til podcasten Ett Case, det investor Bjørn Kristian Stadheim og jeg, programleder Peter Ozsvat Carlsson, går i dybden i ett case per episode i jakten på de gode investeringene. Innholdet i denne podcasten kun for informasjons- og underholdningsformål og skal ikke oppfattes som investeringsrådgivning. Både vertene og eventuelle gjester kan ha direkte eller indirekte posisjoner i de instrumentene og investeringene som diskuteres. Vi tar forbehold om at feil kan forekomme. Hjertelig velkommen til en ny episode av podcasten Ett Case. Og i denne gangen så har BK og jeg tatt turen til Sverige for å møte Hilbert Group, et selskap som vi har nevnt ved flere ganger. Det er min største posisjon, og et selskap vi har hatt en episode på før. Denne episoden er starten på et samarbeid hvor vi lager lager innhold sammen med Hilbert Group, og dere får bli litt kjent med Hilbert Group, et sponset samarbeid der altså. Og i denne episoden så tar vi litt dypdykk, snakker om hva er Hilbert i dag, litt hva er tanken fremover, og hvordan har det hele utviklet seg. Welcome to the studio, Niclas. Today we are going to talk about the journey of Hilbert Group, what it is today, what it is in the future, and how it has become what it is today. Welcome to the studio. I'm here with the co-founder, Niclas Sandström. How are you doing?
It's good. Thanks for having me.
So, in this episode, we want to explore a little bit. First, what is Hilbert Group, and take a deep dive into how it functions, how it works, and what's in it for the future, and then roll back in how did Hilbert become what it is today from the beginning. So if we can start with what is Hilbert Group?
Yeah, so Hilbert Group is a crypto company, a public company. It's listed on Nasdaq First North here in Stockholm. We do two things predominantly. So we run, and that's the biggest, we have two legs. So the biggest leg is asset management. We run a number of funds. Right now we run 4 funds that's catering to institutional investments. Most of the funds are systematic or algorithmic, meaning most of the trading is done by computers. Those 4 funds have different risk profiles we can talk about maybe a bit later. So that's one side. It's sort of a traditional asset management setup, but applied to crypto. The second leg is data and analytics in crypto. So we own a subsidiary to Hilbert Group called coin360.com. It sort of caters mostly to retail today, but we have some institutional customers, and it's all about data analytics in crypto.
Really, and maybe this also goes a little bit hand in hand with the algorithmic trading to get the data and everything, and then...
Yes, that was the original idea. Okay, we're doing all of this analytical stuff on the hedge fund side. Why can't we package it and build a platform for data analytics? And that's why we bought a majority stake in Coin360 back in 2021. Very
interesting. And if you can give me some numbers, how where does the revenue come from? How much in the asset under management? All this, the structure of the company, really.
Yes. So currently today we are running. So there's been some recent press releases, but if we look at the funds that we have, we're running more than $350 million. Most of that in one fund, which is sort of the youngest fund. It's called the Sapo Byzantine Bitcoin Credit Fund. It's a very long name, but we are the investment manager for that fund, and that's basically a Bitcoin fund. So it's Bitcoin denominated. It has, let's say, the objective of the fund is to increase the amount of Bitcoin for the investors. So the investors invest in Bitcoin, and the yield is on top of Bitcoin. And when they redeem, they get Bitcoin paid back.
Yeah.
And that's something that we've seen is very popular. And obviously, Bitcoin is having a good run right now. But the reason for the popularity of these type of strategies is that you have a lot of natural large holders of Bitcoin balance sheets, and you can put those balance sheets to work to get this extra yield.
And since it's Bitcoin dominated, I would also assume that the fee to Hilbert Group is also in Bitcoin.
Yes. So everything basically is Bitcoin denominated.
Right. So in fiat, then the more the Bitcoin goes up, the more you earn on the fees itself due to the fees being in Bitcoin.
Yes, that's right. But one can also see it from the dollar side that, when Bitcoin goes up, the AUM goes up in dollar terms, hence you get bigger fees.
Yeah. Very interesting. And you said you have 4 funds, right? And this is the one specialized, the yield fund. What about the others? What kind of funds are those?
It's basically, and that's where we started. So these are algorithmically traded funds, so they go 24/7 without any intervention. Different risk profiles. So we have one low risk, one mid risk, and one high risk. We started with a high risk fund in January 2019. That was the first fund. We started with $1 million, predominantly from friends and family. And that was it's still a fully invested in crypto. So it's long only, meaning it doesn't take any short positions, and it's always fully invested in the market. So it's a highly volatile fund, and it trades around, let's say between 60 and 100 different cryptocurrencies at any point in time.
Yeah, that's
so
broad.
It's sort of diversified. And that's for people who can stomach a lot of risk. But it's basically, we might come back with that, with risk appetite and so on, but it's more of a high risk type of product. Then that was January 2019. As we progressed, there was a disastrous year of 2022, if people remember it. There were big collapses, right? It started with Terra Luna, $60 billion cryptocurrency that collapsed. That triggered a lot of other collapses, like Three Arrows Capital, which was the biggest hedge fund, crypto hedge fund at the time.
Yeah.
It collapsed. Celsius Bank, lots of depositors lost a lot of money, collapsed. And it sort of culminated in FTX exchange later that year's collapsing. So when all that happened, investors were very defensive. We see this in traditional finance as well. So people don't want high-risk products at that point in time. They want more market-neutral type of products.
Yeah.
People were content with earning maybe 10-ish% per annum. So we developed what we call Hilbert V1, which is sort of a market-neutral fund. Market-neutral in the sense that it's uncorrelated with the rest of the crypto market. Targets maybe 10-15% per annum.
So like a pure alpha play here?
Sort of. It's, it doesn't, more or less market neutral, low risk, lower drawdowns. And that was the kind of interest the market had back then, because everyone was so burnt by what is happening in all these collapses. But it's a natural cycle, and then now risk appetite is coming back. Now people want more directionality, i.e. they want some beta, they want to be partly long. And of course, Bitcoin is dominating. Everyone is looking at what is Bitcoin doing, what's my return in relation to Bitcoin. It's inevitable. So we also started then, when the market recovered a bit, Hilbert V30, which is somewhere in between the first fund, which is high risk, and the low risk.
Right, so a combination there.
Yeah.
Yeah, very interesting. And these are all for institutional money?
Yes, or accredited investors. So you need to, the minimum investment size is $100,000, but we have mostly institutions.
Yeah.
Yes.
Yeah. So, okay, so you have the 4 funds, and then you have Coin360.
Yes.
And those are the legs that they stand on.
Yes.
You also have some trading on Hilbert's book as well.
We do. A small. It's been quite small since we started. The aim is to build it bigger, but the primary reason is that when we develop the algos, we do it in-house first on real money, because you can't. There's a limit to back testing and having ideas about it. So we always road test all the algos, and throughout time we've made some changes to our algos, and it's all done in the proprietary portfolio.
Yeah.
Yes.
Okay, I see. And that takes me over to the people here, because this seems very high level, and for people that don't know you may wonder. And I seen the list, and most of you have doctorates and very heavy CVs from traditional finance, and very very heavy people, heavy hitters here. So can you tell me a little bit about the team? How is the structure? How big is Hilbert Group in terms of the people?
Yeah, so that was basically the original idea when crypto became a bit big, early 2017, Bitcoin, Ethereum, and so on. That and it was a lot of Wild West back then, much more so than. So the idea was, okay, if we take a serious, let's say, hedge fund, traditional hedge fund setup, with all that it means in terms of operations, in terms of how transparency, in terms of corporate governance, and we apply that to crypto. And that's sort of in itself a good idea, we thought, and I think it still is. But so that's when, and then you need experience from risk management, right? You need experience from not being a crypto bro and just trading something.
Yeah.
Proper risk management, having run money before, see how a proper fund setup should look like. And that was the idea. And many people wanted to join at that point in time that had a long experience from traditional finance. And so that's how we started. So it was really in our network that we looked around, former colleagues, I used to work at this hedge fund for 7 years called Finisterre Capital. So many of those former colleagues, they moved over to Hilbert and so on. So we're like 12 people today, but there's also external people, maybe 4, working with us, but 12 full-time employees, which is fairly large for a fund or a company like us, but we need it in order to be taken seriously.
Yeah.
Basically, and now I think it's starting to pay off.
Yeah, and you have operations in Sweden, London, and Malta, right?
Yes, that's right. But we also have employees in Netherlands and in Switzerland as well.
So you very cherry-picked the best heads to get the team here.
Yeah, it's also partly because of COVID maybe, but it started even before. It's easy. We can do everything we want to do online, basically.
Yeah.
Which gives people freedom to live where they want. But of course, I like to sit in an office, and Malta is like headquarters. That's the biggest office. And me personally, I like to go to the office every day and meet people.
I can see that. Actually, but in 2017, it must have been a bold move to take this hedge fund approach. I remember I was also working at the quantitative fund in 2017, and my former driving teacher, tutor, to take the license, he called me, and he Bitcoin is a big deal. What do you think? Should I buy some? And I replied to him, I mean, what do you think when your tutor calls you to ask you? Does it sound like your field? So my initial response back then was really this lack of seriousness and this crypto bro approach, and lacked all the infrastructure and everything that is found in finance, right? Hats off to you to take that approach.
It was just interesting. It was so easy, and it was done by technologists, right? Crypto coming in, so you could, after 10 minutes reading, you could make a short Python program that actually could execute trades.
Yeah.
And that was sort of wow, in 10 minutes.
Yeah.
We think, it was worth taking the risk. You go in there and then... at that point, we were convinced that this is probably going to be quite big. I think there's no harm in taking risk. If it doesn't work out, then you do something else. So we felt comfortable doing that at that time.
And the background of your colleagues, where you said some came from the former hedge fund, and the others?
Various investment banks. So we have people from JP Morgan, Morgan Stanley, Citadel, Goldman Sachs. So it's sort of the typical investment bank and hedge fund crowd. There are a lot of people not having that background in crypto, especially in technology. And I know, you mentioned PhDs and so on, but I think there's also many PhDs. There's an inflation in PhDs, even though I'm a PhD myself. But ultimately, it's about making money for the investors.
Yeah.
And you have a lot of well-run funds. No one is a PhD, but they have really solid algos.
Yeah.
So it's just, ultimately, it doesn't matter, the background, and we really consider that. But it's all, what kind of service and what kind of return do you give your investors?
Well, to add to that, I also used to be a derivatives broker, so I seen risk being taken hard.
Yeah.
And both from people with long experience and not, and I seen, even hedge funds blow up.
Yes.
Under the COVID boom there, and this relation to risk really, and the mathematics behind it, especially when you go out on the risk curve there.
Yeah.
I think in my opinion, there's a difference there between people who has it just worked out. They're taking a lot of risk and it just worked out all the way until it suddenly didn't anymore.
Yeah.
And often I see the more people coming from a risk background, and also then often correlated with the education and the PhD stuff, they have a more respect for the unknown.
Yeah.
Right. And so even though the absolute returns is what matters, the robustness I envision, at least when I see the team that you have, then I think, okay, these people know stuff that I don't know, at least, and they also have respect for what they don't know themselves.
I like to believe that that's the case for Hilbert. We're probably going to talk more about leverage later on and how that's related. But, you had these Nobel Prize winners in long-term capital management. And as someone said, they mistook genius for leverage
for genius.
But it's more a craft. I've seen it in traditional finance as well. You have these old school hardcore traders who are not quantitative at all. They barely know what correlation is, but they're very good. And they have this sense, the craft of what is too much risk. And I think, even sophisticated shops where you have highly educated people with a right background, they get greedy. And I think, just because we haven't seen a 30% move in 2 years, it can happen.
It won't
and then
happen,
it happens and it wipes them out. And I always appreciated that with like that old school. They sit there staring at the screen and have a very sound understanding of risk. Because whatever you think is the worst scenario, usually the real worst scenario is much worse than that. That's, so you have to be really defensive. It's all about staying in the game, right? Because once you blow up, it's game over.
It's as they said in the book, The Infinite Game. Have you read it?
No.
I can recommend it very much. Where it's game theory, and says in many games you can lose, right? And it's a football game. You know how to win. If you score more goals than the other within 90 minutes, you won. But in business, it's very hard to determine who won. Right. So it's a long-term game. It's not a short-term game. But the only thing you know is if you out of the game, then you lost. So if you blow up your account,
that's it.
Then you're out. You lost. But there's no way of winning. So the thing is to stay in the game. That's And regarding stay in the game, then, how does it outlook for Hilbert Group? I've seen that you have mentioned in the latest report a 5-year plan, and we're currently in the second year. What is this 5-year plan?
It's not necessarily like fixed. That's how we view it from the beginning. But I think now we're at a place where we're at the right place in the cycle, I think. It's been pain for a couple of years. We're fairly big. We're one of the biggest hedge funds, I think. It's not that many hedge funds who are more AUM. But we're still early and can grow in so many ways. So, for example, something we like to see ourselves as a solution provider. So if a big client, for example, Sapo Bank, wants a specific solution, we would like to build that. So looking forward, like the next 3 years, say, that's something that we want to become even better at and having even more resources, because I think it's going to be where the market is turning. You need like tailor soon solutions applied to digital assets, and many institutions have wildly different requirements or wishes, so you need to be flexible. So as a solution provider, becoming one of the biggest solutions providers in digital assets.
And really forming the landscape of the management of cryptos then?
Yeah, to some extent, but like sort of driving product development or working together with our clients, having the right setup, and so that they're comfortable and that it works the way it was intended to, basically. And there's a lot of work, right, in doing that. It sounds like, but it's not easy. You need the right platform, you need the right legal setup, you need the right service providers, you need the right kind of processes. So it's something that's quite cumbersome to achieve.
Yeah, I can see that. But now it's you mentioned it's $350 million under management.
Yeah.
How does that look? What's the expectations here?
This is still the seed funding, right? The seed funding of the Sapo fund is not, Sapo Byzantine is not yet completed, and it will open up to external investors, Q1 next year. The aim is to grow it to at least $2 billion in 2025.
So what we're seeing now is really just almost friends and family internal flow of the fund, and then it will open up for other institutional investors in Q1 25 then.
Yes, but I would say Sapo, who is like by far the premier crypto bank, very well run. It's more like they're internally allocated so far. And they have closely associated parties who might come in, and then they open up to the rest.
And the rest of the funds or the fund product, the V1 and the earlier mentioned, what's the expectations there? Because they are open now, right?
They're open now and they're trading. We will see, ultimately, what do investors want? There's no, let's say, running a fund for its own sake. You could have a track record. So we will see how the market develops. And we will, for sure, and we're already doing that, developing new products. But it's mostly in a discussion with what do investors want. And it's still a lot of development going on in V1, V30, V100. We might change a few things. Use also the underlying asset select. So one thing is the algo itself, right? Should we add some features to that? And we're always looking at that, but also the investment universe. What's the coin selection, as we call it, look like? That also drives a lot of performance. And a big question now is, the market structure, has it changed permanently in some way? Compared to how it was a couple of years or in the last bull run. So those are the kind of questions that we're always looking at.
Does some of the strategies have a cap on the AUM? So that what you assume that it wouldn't be suitable to run the strategies above this size?
There's always some cap. Some have more, much more capacity. But we're not anywhere near the capacity constraints in any of them. And we think all of them could easily run over $100 million. Like if we're talking about the first 3 funds that are purely algorithmically traded.
Yeah.
Also in a market like this, liquidity is much easier now. So you can run much more now than you can in a very poor market, right? So it has to do with where you are in the cycle as well. But we constructed, and that's why we're running between 60 and 100 different cryptocurrencies, because if you do that, you have much higher capacity and it's more diversified.
Absolutely. Well, we talked a lot about the management side, but what about the other leg, the Coin 360? How is the outlook for that? How does the future look for the whole retail data provider?
Yeah. So I just can maybe recap before we jump into Coin360, just to make it clear. Like on the asset management side, then the revenue, the income is based on charging investors for fees. So typically you have a management fee and you have a performance fee, and you charge that on the AUM that you're running. So it's a traditional fund, let's say, business model that we run on the asset management side.
Traditional hedge fund model,
or just,
really.
hedge fund model, since it's performance fee in there. But on the Coin360 side, up to this point, it's been all revenue, like advertising revenue.
Okay.
It was like that when we bought it, and it's been sort of underdeveloped. But this year we spent a lot of resources, and that's why we're launching a new revamped website in the mid-December. So it's just 1 week change left. And so it's been advertising revenue up to that point. And we have right now, it's somewhat correlated with crypto market. We have 8 million visits per month. So it's a fairly big platform.
Wow. Yeah, that's a lot.
So we're going to add a lot of functionality in the upgrade now. And then we're going to introduce the subscription service, which you can get, you get more advanced tools if you have a more high-grade subscription, but we have a basic, we have a pro and an institutional. And the plan is basically now, increasing that toolbox with tools that are beneficial to everything from retail to institutions. It could be analyzing your portfolio. It could be just connecting your wallet, like Web3. You connect your DeFi wallet, and it calculates the P&L for you. You will be able to do back testing. There will be coin analysis. And again, we recently announced the acquisition of Liberty Road Capital, this Monaco-based asset manager. And they've been AI trading for several years. And they have a very powerful AI engine in terms of trading signals, in terms of, basically even dictating some of the execution and so on. And that is very suitable also for Coin360. So there's a big overlap. And that was part of the reason why we thought that, Liberty Road is a really good buy. So we are working on integrating that AI analysis engine, if you will, into Coin360 and offer it to retail.
So you're really creating a must-have tool for the crypto investors and traders out there.
Yeah, I mean, that's the aim. And I think the combo of a long asset management experience with AI, and I think everyone would have to do something with AI the way it's going. But the good thing is that Liberty Road have used it, right? Live trading lots. They come with $110 million of assets under management. So they used it in a serious context. They know it works, right? That's where they've been generating their income from. And hence, we feel confident that, this has really been road tested, and now we're going to apply some of those AI capabilities to Coin360.
Very interesting. But in a world where there's a lot of, in the crypto space, there's a lot of open source and open stuff, that's the whole thing. How do you think the market will react to a subscription model here?
I think I think it will be fine. It will be a gradual ramp up of, let's say the toolbox we offer. We're also gonna invite the community. So I think June is offering that, so the community can build tools. They can build or contribute with content and get rewarded for it. I think it's natural. If you look at the peers, like the big ones that are maybe not as sophisticated, but they are really market leaders in terms of number of users, CoinMarketCap, CoinGecko, and so on. You have X million visits per month. You can convert X% of these to subscribers, and then you get a more steady revenue. So we're going to have that. But you can use it for free as well. But I think a lot of people still like the revenue model, like the subscription model. You get access to this range of tools. You pay once, every month or once a year, and then you just use it. We still see that as, many people would like to participate in that. That's what we think.
Does Coin360 also have a social part, or is it only the data?
We've been discussing it, but we'll start with data. It's easy to, it's natural, I should say, that it comes into the social, people commenting about trades, having trading ideas. It's a very interesting thing for many people to do.
Yeah.
But in this first upgrade, it's going to be more focusing on the data and analytics.
I see. Very interesting. Very interesting. And how big of Coin360 is yours? You said you bought a majority stake?
60%.
60%.
And the other 40% is owned by, a prominent figure in crypto space that actually owns Cointelegraph, associated with CT.com, Scalable Solutions, Quantum Brains, BQuant. It's a very big player and been very helpful. And there's a lot of resources on that side in terms of, Cointelegraph being a media company and a lot of technological resources. So, but Hilbert Group owns 60% and they own 40%.
And how much revenue does Coin360 generate?
It's been, bar the development costs that we've been sort of footing for now this year, it's been self-funded since the outset. Oh. It's advertising revenue, right? And it's been, cash flow neutral, which is good. But during the bear market, we brought it down to minimum functions there. And now we've seen that the time is right. And end of 1 year ago, we started to let's boost this. So it's been, but still, we've set out some targets in the quarterly report for what we think we can earn next year, and that will be a big change, we think. Partly because of the subscription revenue, but also because of other initiatives that we're doing.
And what are those numbers? What are those goals for the year?
Well, the goal is to have gross revenue for Coin360 of $10 million in 2025. That's the aim.
And I can assume that's a very high margin leg to stand on.
Yes, I mean, we think we have a lot of leverage in that we don't need such a big staff to even scale that up. But it's all about, we see the traffic has increased a lot. It's all about monetizing the platform as it is now with the subscription layer and some other things. And we're also working really, really hard on increasing the traffic beyond, you have a naturally cycle-driven traffic. When there's a bull market, you have more visits. When there's a bear market, much less. But beyond that, actually driving in the SEO sense a lot of traffic by really, streamlining everything SEO, but also we have much higher quality content, for example. If you compare to what is being produced today, that was produced in the beginning of this year, it's huge difference. So those are the things
what type of content are you referring to?
We're posting a large number of articles every week, and we're ramping up that with really lots of insights. And it's incomparable, the quality of the articles today compared to 1 year ago. And that we're just going to work. And we work with third-party service providers to sort of sharpen that even more. And we're much smarter about where we put our efforts, what subjects should we write about, and so on. So it's it's exciting, and I think retail is retail, and you always, if you can do retail right, it can lead to a lot of revenue simply because the market is so big.
Yeah.
And we think we have a good geographical spread in Coin360. We have lots of users in Asia, in South America, North America, Europe. So it's a good mix.
Wow, very interesting. It's really a global adaptation for this for Coin360 then. So what we have here then is we have $2 billion asset under management. That's the goal for 2020 or the end of 2025.
Yeah.
And 10 million revenue in 2025 of Coin360.
Yeah.
That's and on the bottom line there, what's the estimates there for what do you envision for going forward?
It's always, but I can say what was said since it was said in the quarterly report we released last week. but it's basically, you know, having order of magnitude, same order of magnitude on both legs, but basically then 10 plus 10 in gross revenue. That's what we're aiming for. We've had a burn, which we've been open. It's been between $3 and $4 million per year, because we have this bench of relatively experienced people. We have a salary cap, but I mean, we don't pay anyone, and we're open about that, anywhere near market rates, right? So a lot of us took, but the upside is, you know, if this company performs well, people have some options and so on. But we still need this bench in order to attract institutional company. We need actual resources in operations. We need actual resources in risk management, and on the trading side, on business development side. So there's, we think this was the right thing to do. And otherwise we couldn't have gotten some of the clients that we have. And we paid for that in the past 3 years, but we're seeing it paying off now, I think.
But now, as the latest turns of events, or it's not that long ago that Xapo came into that fund came into play and everything. Will Hilbert Group be cash flow neutral or a profitable company?
Yes, in 2025, and I think again that's where we're heading right now. I think that will happen, you know, around Q1-ish, Q2-ish, like somewhere around there. That will be a major milestone, but we're heading there, no doubt. I mean, if we look at what we've done, not only Xapo, but also the acquisition, Liberty Road will bring in revenue. So we are very hopeful. I think the company has never been in a better position, and where the market is now, it's never been in a better position to reach profitability in over the near term.
Very interesting. And in terms of other bigger investments, do you see anything in the near future for Hilbert Group, or is it now more in the phase of capitalizing of the investments that has been done in the past?
We will always look at M&A, but like in the case of Liberty Road, but the specific structure of M&As where it's ideally you don't pay much upfront. They have to earn it out, so to speak. But that's something that's really interesting, and we've been approached by a lot of companies. We have the platform, I think, today to actually, you know, it's a win-win. People have good strategies. They might have some AUM. They're brought under the Hilbert flag. That's something that we're going to look at. But we're not looking to make, you know, let's say cash investments, I would say, in the near term. It's more like doing equity-only deals in an M&A context.
Yeah, I see. Okay, so we see a little bit where Hilbert is today. We know a little bit where we're going to go in the near future. So that begs the question: how did we get here? How did it start? Was the company built up? You were there all along.
Yeah.
What have you done?
It wasn't. I mean, it was more like a gradual that started. Like, let's say, I know when it started because I remember what it's like in March 2017. We were looking. I've been following the crypto market a little bit. The other co-founder, Magnus Holm, at the time he actually developed some vol trading strategies for equity on S&P.
Okay.
But the more vol, the better, right? And then crypto came along, so he applied it to crypto. And I sat there with Frode Foss Skiftesvik, who was one of the two co-founders of Finnish Story Capital, where I was working at the time. And we were having a drink, and we looked at like the iPad and look at the crypto market. Total market cap 30 billion. It's peanuts compared to today's, right?
Yeah.
3 trillion plus. But we saw the growth, and this is amazing, right? What's happening here? And we discussed for over a year, sawing going up, and looking at Magnus' strategies, okay? And then, you know, it became clear that, okay, we should probably do something about this. So we should take the traditional fund setup and we should start the first crypto fund. So I resigned from Finisterre. Frode and another guy seed funded us. So Magnus and I moved to Malta. The reason was because Malta was the crypto island of EU and UK was in the EU at that time. And then we started, and the first fund launched January 2019. Malta was good back then because in London, if you called a law firm talking about crypto, or if you called a bank, nothing. I mean, no one knew anything.
Yeah.
But in Malta, all these service providers already been active. They knew stuff. They've set stuff up.
Yeah.
And so then it was good. But in retrospect, there's no edge, I would say, in Malta. You can sit anywhere today I think, more or less. But that's how we started.
But how really, because you said you were watching the strategies, the vol strategies, and vol for a year, and then you got to back testing or prior to starting up?
No, it was actually running it on real money for a year. That's how we did.
Running on real money?
Yeah.
So you already had a strategy?
Our own capital. Yeah. And tweaking and looking, and most of that work was driven by Magnus because he just took what he did for S&P and applied to crypto, but it was run on real money, yes.
Yeah.
And then we felt comfortable, this is working, there's a lot of... so when you run algos, a lot of things can go wrong. So you really need to test it and be really defensive about it. For example, it's trading 24/7 crypto. It's always on. When you are sleeping, is there a bug that might be rare, but did it pop up, and what did it do to your portfolio?
Yeah.
Not only that, the exchange goes down. What happens? How are you positioned? You get dirty data points that are completely wrong. What does the algo? How does it react to that? So you really ideally want, a long period of testing. There's nothing that beats just being in the market and trading real money.
And how did you handle all these risks with, with exchanges and 24/7 and like?
It boils down to one thing, and that's how we started basically, and that is not running any leverage at that point in time. No leverage, zero leverage. I mean, you can say I run no net leverage. That's one thing. But it could be in absolute terms you're running leverage. But back then we didn't run any leverage. We still don't run any leverage in that fund, in that specific fund. So what that means is that even if the exchange goes down, you're gonna live to fight another day. The big risk, of course, I mean the market risk we accept because we're in crypto and that's the mandate of the fund. But counterparty risk is even more dangerous because that's where you actually can lose all of your. So if you have, for example, all your assets on the exchange goes bankrupt, or something happens there, you can lose it all. But we had custodians early on, so we reduced the counterparty risk. But that's, But I would say the number one was leverage, no leverage, but then, ample testing and error handling, if you get a wrong data point, what does the algo do? How does it confirm or even detect that this point is rubbish,
wrong,
can't be used, and so on. So
and that must be a really big headache, really, because in crypto, when you get a lot of volatility, which is really what you want, you also have, per definition, then very spread out data points. It varies a lot.
Yes.
And to filter out when it's, no, this is wrong.
It
must be a very hard task.
Yeah, there's a lot of code that goes into handling all of those things.
Yeah. So, okay, so you run the fund on your own money, you got it tested, you got some track record, some experiences, tweaking it, and then you opened up from Malta.
Yes, but a Cayman fund. So all our funds that we are running are Cayman funds. But we're sort of based in Malta, and we have the holding company there and so on. And I think Cayman Islands have probably one of the world's best regulatory and also legal framework for running hedge funds. That's why 75% of the world's hedge funds are in Cayman Island. It's U.S. operators are very used to Cayman Island. So that's why we started. And I think even to this day, that was the right choice. It's lightweight. It's much more cumbersome to start something, and I think we will start something within the EU, like a fund regulated inside the EU, like Luxembourg, or some other country maybe. But that is much more expensive and much more cumbersome.
Yeah. And then, so you had the fund going. You were only 3 back then?
It was just, back then, it was just me and Magnus.
And then you had Frode's...
we had seed funding.
Yeah.
Seed funding from Frode and another person. So we were 4 shareholders back then. And Magnus and I were running it, and we had some investors. And then, really, trying to grow the fund. Which,
and what kinds of returns are we talking about at this time?
Well, it's a high... It's always fully invested. So when the market takes a dive, we will dive with it. But we've had like 200% years. We've had years we're down 70, 80% a couple of times.
Yeah.
But then it recovers. It's the nature of that fund. And
also nature of crypto, really. So it's
nature of crypto, yes. Yeah. But you can run less risky funds. But we wanted to run this type of fund in the beginning. And I think a lot of people, it depends how you want to allocate, right? So if people have a portfolio, they have traditional assets, and I want a small allocation to crypto. My view is that, okay, then you should go for a high risk. What you're doing in crypto should be high risk because you have only 5% of your total portfolio in crypto. But there are others who have the view that, okay, we're doing this, but the crypto allocation itself should be medium risk or low risk. So there's different how you want to apply it, but that was high risk. And we tried to develop that, and we noticed, it's a fund that is very popular when things are going like in a bull cycle because it's long only. But then the market dipped, harder to market a fund like that in that environment. So then we were thinking about other products. Around there, we listed, right? Slightly before that, we listed on Nasdaq First North and became a public company. Basically, we felt, okay, it would be good. It would help the hedge fund business to be Nasdaq listed, more transparency, more governance. We also raised money, right, to fund the expansion. And then we started another 2 funds after that. And we bought Coin360 and so on.
Yeah, really. Yeah, exactly. And how did you go about to reach out to the investors? I know you came from the hedge fund world, so maybe you had some knowledge on how to go about, but it has been quite a run here. Yeah,
we knew, but it's hard, and that's, if you're talking about barriers of entry or barriers to entry, it's one of the things, how do you distribute, which is very hard. It's not easy. The competition is fierce. But we knew, how, in principle, how to do it, but apply to a new asset class. You need to find what institutions are willing to allocate to crypto. But usually it's a long process. It's about the relationship. Some of the investors that eventually came in, we talked to for over 1 year. So you have meetings, you keep them updated, you keep them engaged. And at some point they decide to allocate. So it is really a hard work. And that's where a lot of smaller funds fail or where they struggle, because you really need to be able to distribute and have the business development and the credibility to do it. That comes back again to the background, right? That you need to be credible. They need to feel safe. And you need to find the right people, and you need to frame it in the right way. So there's many things that goes into that, and I think that's one of the hardest aspects of running a fund business is actually to being able to source enough AUM. That's the biggest challenge.
What about the internal systems? I can imagine you have a lot of internal systems, and since everything is data-based, and it's how was the development of that? Did you bring a lot of with you, with the usual that you were familiar with, or did you have to make everything on your own? Or?
We started, it's a combination. So all the trading logic, or that it's proprietary. That's sort of part of our IP. Crypto has decent setup with APIs and so on, but there's a lot of coding going in from our side. There are a lot of service providers today that offers, to do a large part of that or all of it. But we don't use them because we have a proprietary system. Where we use third-party systems is for reporting, for custody, for doing certain types of transactions, like between funds or between funds. Well, maybe not between funds, but between funds and investment manager and so on, where you need a rigorous setup. But the trading logic is still proprietary. But we're not opposed to buying. But some of these systems are very, very expensive for what you get. Some of them are very cumbersome to configure. So up to this point, most of what we have in terms of that is proprietary and built over time in-house.
Yeah, I can envision it. It's a lot of going on there, and what I take from it, what you're saying is you use the externals when trust is needed, and otherwise you make it yourself.
Yeah, it's more like so the trading is sort of our IP where we claim we know something, but for example, many institutional investors would like. So let's take a key component for a serious fund business, which is the fund administrator. A fund administrator calculates the holdings, the value of the fund essentially, on some frequency. Usually every month, could be a daily. If you have a daily fund, they calculate every day. And the reason institutional investors would like you to have a fund administrator is because they want an independent third party that are valuing your assets. Because in history there's been hedge funders that's been marking them to fantasy, hiding P&L, whatever. So that's one thing that just increases the transparency. They also feel comforted if you have a custodian. You're not like it's a third party who might be insured or have some other a third party that takes responsibility for that the assets are securely stored. So it all comes back to feeling safe, basically, for investors. And hence, there are red flags. A big institutional investor would say, "Oh, you don't have a fund administrator." That would be a no-go for most
right
institutions.
out.
For most,
Yeah, I can see that. And this is a little bit. It takes me back to the strategy you told me about with the staff to staff up and to have really the framework to show or to provide, give the confidence that people need to invest with you.
Yeah,
and it's really a trust game here all over.
Yes, it is. It's always when it's money on the line that and you need to talk the talk. It's in the sense that the investor world wants it framed in a certain way. The report should look in a certain way, and you should also demonstrate that you know what you're talking about, and it just feels safer being with people who have done it before. There are, of course, young people no background in asset management doing it right, but there's much more examples of that not being right if you don't have a background in asset management. It's the craft again. How do you minimize the risk and have the right setup?
Yeah, absolutely. It's a very crucial thing, and especially with the adaptation from institutional money and the big money, and where do you see that go? So where will the big inflows be? There's a lot of talk about the crypto adaptation really, going into society as we know it, and maybe transform it a little bit. But where will the big money come from for Hilbert Group in the future? Like, not necessarily specific actors, or players, but like in scale. Will it be countries? Will it be pension funds?
Yeah, I think certainly pension funds. There's a lot of pension money. I mean, that's one of the absolute biggest. But they feel like, and if you're sitting there, and some have already started to allocate, and if you're sitting there as a pension fund manager, conservative, and rightly so, but they might want a 2-3% crypto allocation, and some have started. But it's just started. It's almost nothing yet on a percentage basis, right? But there's enormous amounts of capital there. So that's one thing, maybe between 2 and 3% of every hedge fund will be in digital assets, and that's trillions. There are also corporate balance sheets, more and more seeing it as an alternative. If you're managing, you have some kind of treasury function or just managing the corporate balance sheets, private companies, some of them have some allocation. I mean, the most extreme example is MicroStrategy, right? Which is more of a Bitcoin holding company than
anything
but
else.
You can talk, a few percent or maybe 5%. That makes sense. And then, of course, as you said, like sovereign wealth funds, governments, as has been proposed by Trump's, it's a Trump policy and the Bitcoin Act and so on. So I think the next step is the big serious players going in. I mean, BlackRock has this ETF, right? But literally no money of the really big money is in crypto yet. But there will be some percentage of allocation. And I think, digital gold, like Bitcoin, for sure, most funds would like exposure to Bitcoin. But there are also others. So it's just starting now. It's like this serious business is just starting now, I think.
And then, right, so you have the ETF, so you can have direct exposure, right? And maybe that's a hard question, but why would players out there with the big money choose Hilbert Group?
I think we've sort of built a reputation and we've survived, which counts for something in crypto, in the sense that surviving without blowing up. But it comes back to the trust factor again, and the people involved, that they feel comfortable. And there are other companies like ours with similar backgrounds, but I think it's just maturing more and more, and you just need to be as good as you can and really listen to the client and provide what they want. And I think we stand out there. I think we have a very credible bench that knows a lot. I also think that the board is very credible. I mean, some of the board have actually started big traditional hedge fund businesses. Even in Liberty Road, Russell Thompson, who comes in, he used to run the Cambridge Strategy hedge fund, $3.5 billion in assets under management. It's like people who have seriously done successful things and done it right. And I think that gives comfort.
Yeah, I can see that. And also maybe that, the Hilbert offers, especially with the yield product, a different angle than what's obtainable elsewhere, really.
Yeah, I think at this scale and with the robustness it is, again, in cooperation with Sapo, but that kind of relationship we would like with other big firms. We work together and we solve a problem.
And that's kind of rare to see in finance, really, innovation. We have, what is it? What we have, 5,000 years of financial history. And a lot of the financial products, the futures, options, they are really, really old. And with the credit, so it's not much innovation in the core of finance. And what we see now with the adaptation of crypto, it's some sort of innovation, really.
Yeah, it's the biggest thing, I think. You can talk about crypto and blockchain without going into, let's say, the investment part of it. If you look at the administration muscles of smart contract and blockchain, regardless of like having just the bookkeeping, it's already revolutionizing. And, running exchanges, taking away back office functions because it will be handled by smart contracts, the auditing capabilities, when everything is just on the ledger, the settlement time going down to zero, basically. All that is happening. And the rails of the future financial system will be in this type of technology. Regardless of, let's say, cryptocurrency speculation or investments, the technology is super strong. And that's here to stay for sure.
We had a talk with my podcast co-host, Beko, the other day about how can really, what could a future look like, right? Because one argument is that Visa payments, and it works, right? We as a consumer of the product, you don't suffer. It's not like it could have been faster. It's some bank transfers, yes, but like the payment solutions, they are solid, really. And I could see a vision or a future to counter steer that the innovation doesn't come to replace what's already working, but to add something to it. And what if, and I don't know, but what if we go into a future where a lot of the companies have their own tokens, and it's really just a change of tokens. So you do a work, you get a token as a salary, and you change it for somebody else, right? That's back to the core of what money is, an exchange tool, right?
Yeah.
And by doing that, all auditing, all accounting, all everything is just settled on a society level already, and you're just changing your productivity with somebody else in your own coin or what you're into. And I find this very, very interesting thought. I find it as a very interesting thought that what could the future look like with the blockchain technology in mind, really, and smart contracts.
I think, your ID will be tied and put, verified versus a blockchain when you do. And I agree on that it will add and strengthen things. Like you said, there's so much effort and money being spent on accounting. I mean, Hilbert spends a lot on accounting every year and auditing. But all that is sort of trivial with the right blockchain setup. It's already there on the ledger. No time or no effort.
And even what you said with the fund manager, or what you called it, who use the assets of the fund, and it gives a third party assessment of what's there. It's also a part of bookkeeping. That's not necessarily what people think of as bookkeeping initially.
Exactly. Fund administration and so on. So a lot of the back office functions and even trading, right? Even investment functions will be taken over by smart contracts, and the combination between AI and smart contracts, we'll see where it leads. But it is, it's very exciting.
Very exciting times. But what I want to hear more about is really the recent partnerships and mergers and acquisitions and what's been going on in because we left the past a little bit. We had about the early beginnings of Hilbert, but then it's been a lot of going on in the last year, 2024.
Yeah,
a lot of going on. What's been going on?
Well, I mean, if we start with Sapo Bank, it's our most important partnership at the moment. It's very interesting, and it's a new type of product for us.
But to introduce Sapo Bank for the listeners who don't know.
Sapo Bank is the world's biggest crypto bank, a huge company in terms of assets. They are, they take deposits in crypto. They have custody. They have a lot of regulatory licenses. I think it's headquartered in Gibraltar, but they have activities in many countries. They recently got the FCA license in the UK, and they have a lot of innovation going on and new products and so on. It's owned by one of the biggest crypto, let's say, personalities, Vences Casares. He has a long history in Silicon Valley. He's a friend of Bill Gates, and it's really a serious, well-run operation. And I think they will emerge as, they're already the biggest, but it's a really, let's say, influential player in this space. So we are doing this asset management together with them. We are the investment manager. It's their fund. That's why it's named Sapo Byzantine Fund. So that's a big, like the first really step up for Hilbert in terms of getting to the next rung of the ladder.
The big external
serious
money.
institutions. Yeah. That's one thing. And then we have Liberty Road Capital, also a very serious firm, a good track record, a lot of pedigree in the firm, and where we're joining forces, basically, acquiring them, everything will be Hilbert branded, but we then use the AI trading. They are running their products very different from us. We've been now incorporating in the Hilbert IP. So they run yield-enhancing strategies, also Bitcoin denominated or ETH denominated, more low risk, more like 10-ish, 15%-ish per annum, they use derivatives, solely derivatives. And that's not something we do to that extent. So that's interesting for us as well. So it's just, the evolution of the firm. I think those are the two biggest things last year, but it's just starting now, and we will do more of that. We want more big relationships like Sapo with other players and so on.
It's very interesting, and there's also been some changes in the management going forward.
Yes.
Can you tell me a little bit about that?
Yes. So I'm going to quit as CEO of Hilbert Group, and the Chief Investment Officer of Hilbert Capital, so the asset management branch, Barnali Biswal, she will be Group CEO come 1st January 2025. She has a long background in traditional finance. She was, amongst other things, she was managing director at Goldman Sachs, running their high yield credit trading desk. She was there 14 years. She is, I think, and many in the company, including the entire board, think she will be a great CEO. She's also extremely well connected. She's based in London. That's an advantage. So she will handle the day-to-day business. And I will focus more on M&A, Coin360, also marketing of Hilbert, because Hilbert is not yet well known. It's a little bit known in Norway, more so than in Sweden. And we're going to work hard to make it more well known here. So I'm going to focus on those things.
So you're not quitting Hilbert?
No, I'm going to work just as hard.
Change of the roles.
Change, and I'm going to take a board seat before year end. And then just continue to build as usual. And I'm working closely with Barnali and others in the firm, basically.
Very exciting times for Hilbert Group. Absolutely, it's been a pleasure to hear the story and going forward. And really, to summarize here, we have crypto asset management. That's one leg. You have the Coin360.
Yep.
And the Coin360 will be relaunched now.
That's right.
And estimated $10 million. Revenue.
That's target for 2025.
Target.
Yes.
Target, and $2 billion under.
At least in AUM for the asset management.
In 2025.
Yep.
And back to that 5-year plan. How does it look after 2025?
After 5 years or after 2025?
Okay, after 25. So after year 3.
I mean, it's hard. So much will change this year, also because of the regulatory. We'll see, but as was mentioned before, I think US is going to be very important. There's every signal in terms of the choice of SEC boss, in terms of who is supporting crypto, that we get a decent regulatory framework. Then I think, beyond that, it's gonna merge more to mature into traditional finance. So the one part for Hilbert would be that we become a really big asset manager, possibly also doing traditional, running traditional funds, but really big in digital asset management and running a lot of funds. You have like companies in Sweden like Brummer Partners, or you run a big multi-strat fund and you have like many funds underneath. I think that's certainly where it can be going, and that would be a good path if that were to happen. And I think, the regulatory development is key here, but I think it's coming now finally, so that we can open up to a broader range, pension funds and so on. It's in terms of Coin360, I think we have a unique position. I don't know any other firm that has like a fairly advanced asset management and then building or packaging that into a data analytics platform. So we're going to be we are very excited about that. We're very excited about the community contributing. It's sort of exponential growth. If you do it right, you have lots of contributors out there that can build nice tools or contribute with other type of data or just analysis content on the website. So that's going to be fun. But then we'll see. one thing that's very hard to predict, but we know it will have a big impact, but we can't tell you how, is what is the merger of AI and crypto going to look like? What is going to... we will see. But there's so much... I mean, AI in itself, the pace of development is just insane right now. Yeah. But it's exciting. And I think it feels like we're in a good field for the future, I think.
Well, thank you so much for the information.
Thank you.
And we will talk a lot more and go through a lot more topics in coming episodes. And the content will be found on your pages and on the podcast Ett Case pages. And until next time.
Right. Thanks for having me.